Alright, ladies and gentlemen, welcome back to the channel. We have a note or a message put out from Adam Aron that I would like to share with you here in this video. Now, on top of that, I think it's very important we talk about what's happening today, because AMC stock, if you guys want to look at the charts, is down 34% at the time of recording this video, although you have seen a decent bounce from the lows at $3.18 per share. AMC stock is trading around that $3.50 level, so quite a decent bounce, but you're still down quite a bit. So let's put this situation into context, clarity. If not, hopefully you just learned something here in this video. So first things first, let's start with this letter. Now, I think a lot of this is some of the same stuff you guys already know, but we'll go ahead and read it. So he says, "Fellow shareholders, I am writing to share my thoughts with you about some exciting AMC news. On Friday, the Delaware Chancery Court ruled that you can now immediately move to implement the proposals that were approved in the shareholder vote of March 14, 2023. The proposals to increase AMC's authorized common shares and do a reverse 1-for-10 split of the AMC shares, which together will permit the conversion of all outstanding APE units into AMC common shares, were approved by 72% of AMC shares and 91% of APE units that were actually voted in the March shareholder election. This was a rigged vote. Let's be honest here. I'm at no point ever am I saying that this was a legal vote. This was rigged, okay? The way that they did this was rigged. Can't really change that all too much now, but just know that's where I stand on this. Now, of those who actually voted, there are very large majorities in favor of our proposed actions, but no large-scale vote is ever unanimous. Some of those in the minority continue to this day to be vocal in their opposition. So I want to explain below to all of you, those who voted yes and those who voted no, those who are still on the fence, why I think we are on the right path. First and foremost, AMC should now be able to raise additional equity capital. We can use this access to equity capital to shore up our cash reserves, pay down debt, invest in growth initiatives to strengthen our operating profitability, and pursue transformative merger and acquisition opportunities. When AMC has the capability to raise much needed cash, those rooting or betting against AMC face much more of an uphill climb. And with the conversions of AMC common shares and APE units, we hope and expect to be able to raise equity capital more efficiently and with less dilution than when the APE units were trading separately at a significant discount to AMC common shares. The steps we will be taking now are shareholder approved and mean the following to AMC. And he goes on to list a couple of them. AMC will be more resilient. Were it not for our ability to raise equity over the past 3 years, AMC simply would have not survived the pandemic induced decline in our business. Looking forward, the flexibility to raise equity capital at the appropriate times is an absolutely vital tool for any large company, and AMC is no exception. I think this is kind of what I've been highlighting. I wish Adam Aron would have went into a little bit more detail on this. Let me read that again, this last sentence. Looking forward, the flexibility to raise equity capital at the appropriate times is an absolutely vital tool for any large company, and AMC is no exception. Let's remember this. The stock market is created and is around, it's available for you to invest in, not for you to make money. Yeah, that's a byproduct. That's great. But the stock market's actually here to allow companies to raise capital, to actually sell stock. Now, everyone's been under the assumption that AMC is just going to smash the stock down. The second they're going to raise all of this crazy capital. And I think this is hinting at that's not going to be the case. Maybe they do a little bit at first, but they're not going to dump on the stock and crush the stock on purpose. Because it makes sense, common sense, why AMC would want the stock to go higher before raising capital, because they'll be able to make more money. So it's in their best interest to see AMC stock go higher before actually raising capital. So keep that in mind. Obviously, who knows what AMC is going to do, but it's not like they imminently need the capital, right? 2025, 2026, when a lot of their debt maturities do come due, that's where this situation of being able to raise capital gets a little bit better. Last quarter's earnings, AMC was profitable. So I don't think there's massive dilution coming by any means around the corner. So number 2, we eliminate capital raising inefficiencies of APE units and trading at a significant discount to AMC shares. Converting APE units to AMC shares results in a single price for all AMC equity. The single price eliminates the unnecessarily higher dilution caused by the lower market price of APE units. For the past full year, for an example, to raise cash, AMC could only sell APE units, and they only could be sold at a great discount to AMC shares. With a single equity capital structure, I believe AMC will be able to raise equity capital more efficiently and on better terms in the future. I mean, when I read this, honestly, I just got pissed off, to be honest with you. And if this doesn't piss you off, then I don't know where you've been. This was supposed to be a dividend of sorts for everyone that bailed out AMC. So please, just please don't frame it in that light. I get what you're trying to say, Adam Aron, but just don't frame it in that light. Number 3, an improved balance sheet should result over time. The simplification of our equity capital structure will enhance our ability to buy back debt or exchange debt for equity, strengthening our balance sheet if we do so. Again, kind of highlighting nothing is set in stone. It just provides them more flexibility. Number 4, this simplifies ownership in AMC. Consolidating ownership of AMC into one single class for all shareholders makes it easier for investors to track their ownership positions in AMC and eliminates the added complexity that some brokerages have imposed on holding or trading preferred equity securities. One of those paragraphs that just, pisses you off right there. I hate that. I think I have the biggest problem with incentivizing or implying that this conversion, something that was supposed to be a dividend for AMC common stockholders, implying that bringing that back into one common stock is good, just on the narrative of it was supposed to be a dividend, a positive for you and I. Don't frame it in that light. That's not a positive for the original investors in AMC that held through the dividend, quote unquote, and are now in this situation. So I understand your frustration. Let me tell you, this is pretty painful to actually read. And this is the second time reading it, and it still pisses me off. Number 5, we gain a better opportunity to transform AMC. We will be better positioned to invest in growth initiatives, including more innovation at our theaters, optimizing our theater portfolio by acquiring high-performing theater assets. In addition, these actions make it more likely that we can succeed if we were to pursue attractive shareholder value creation opportunities through diversifying and transforming our business. Most of you who actually voted back in March 14th election agreed with us, but to those of you who thought otherwise then and still do, so now think hard about this. On dilution, some of you fear dilution is a mistake no matter what. You are wrong. To the contrary, sometimes raising money is an absolute imperative. Over the past 12 months, for an example, AMC raised $418 million of cash through the sale of APE units. As of the most recent June 30 quarter end, AMC had $435 million of cash on hand. Can you imagine how dire our circumstances would have been if we hadn't had the foresight to raise that cash? Companies that run out of money face financial ruin. Just ask Cineworld Regal shareholders or ask Bed Bath & Beyond shareholders. But at AMC, at the moment, we have a positive market cap. We are so much stronger because we raised money along the way. On the reverse split, I keep hearing from some of you that the reverse split, we are stealing 90% of your shares. If someone takes 10 $1 bills from your left hand, puts 110 in your right hand, would you be losing 90% of your money? $10 is $10, whether it is the form of 10 ones or 110. Yes, with a reverse split, the share count reduces, but economically, shareholders hold the same portion as they do currently. What happens after the reverse split occurs is unknown. The market price of AMC shares could either go up, stay the same or go down. But that is true right now. Bad actors can attack us after a reverse split, but they can attack us right now too. Yeah, that's been happening. Okay, we'll just read the little bit of this. It says the court ruling on Friday makes a significant milestone for AMC, and I would like to express my deepest appreciation for your unwavering support and trust in the AMC leadership team throughout our journey together. That support and the thoughts of our shareholders have been and will continue to be instrumental in shaping the future of our company. As we move forward, I encourage you to stay engaged with our company, follow our progress, and continue to support us with your valuable insights. Together, we are building a brighter future for AMC and its shareholders. I close with this overarching thought. Knowing that we can do our best for AMC to smartly raise capital is a terrific relief. And when no one sees the recent successes of our movie theaters in attracting millions and millions of guests to watch world-class storytelling, it is easy to understand why I am ever so excited about the opportunities for AMC that lie ahead. Sincerely, Adam Aron, or AA. So, a couple things I point out of this. One, I understand the frustration. I honestly do. It's a very frustrating situation when something is trying to be spoken upon as if it's a positive when it was supposed to be a positive for you from the start, as you were the ones that, bought AMC, got the ape stock. Now it's literally being converged, right? Being taken away, putting back into one equity. In theory, if you held, not too much should have changed, but it's downside pressure nonetheless. So I understand the frustration. But again, the same thing is true of what I said in the beginning of this video. I don't think this automatically just assumes that we're going to see massive dilution. I don't think that is the foregone conclusion. I think the markets are seeing that as a conclusion right now, that as soon as AMC gets the chance, they're going to dump on shareholders. I don't necessarily think that's the right way to look at it. And I think you could actually see a positive move after the reverse split for AMC if AMC does not immediately raise capital. If AMC just holds off, that could be very positive for AMC stock. Now, I think as well, the short thesis, the trade actually in and of itself is done. There's really nothing left for the hedge funds or institutions to do. They were in this trade. They shorted the stock. They got what they wanted. The reverse split. And now it's one of those moments where if you've been in this trade for a while, if you're a short, it doesn't make sense to stay in it, especially with cost of borrow fees as high as they are. Now, if we take a look today, look at the cost of borrow fees, guys. 956.5%. 956.5%. Cost of borrow average, 575%. These numbers run every single day. So you get charged interest every single day, no matter if it's a weekend, 365 days a year. Just simple, rough math here. There's 365 days in a year. If cost of borrow fees are 900%, you're paying about 3% a day. 2.5%, 3% a day, around there. It doesn't make sense to be short in AMC still. Some people believe this stock will continue to fall. I think that's a false narrative, and I think that is to your benefit. Now, if we take a look, live short interest are free float at 27.68%. 142.89 million shares that are currently sold short. AMC stock is still on the threshold securities list. And if we go ahead and pull up the FTD numbers that we're currently looking at, that's another big story of this week, as you guys do know. There's 11.6 million cumulative FTDs that come due today. Tomorrow, you're going to see about 14.2 million FTDs, and this could be a positive for AMC stock. Once we get through this kind of overreaction initially, that could be good. Now, it does look like AMC is being attacked today. That is for sure. I do agree with Adam Aron when he says that. 262 option trades today in AMC stock. $68.63 million worth of options, which is more than what you see on any given week, like way more, with a positive order value of 2%. Now, I've said it in other videos, and I'll say it again. I think the next big move from here is likely to be an up move, because just the simple logic, there's not a reason to really be short in AMC anymore. The stock's down 34% today. If you're not covering today, then you're just begging for trouble, right? It's not like the stock's likely to keep falling from here. Like there's really no reason or anything to support that will happen. So keep that in mind. This is probably the worst that you're going to see. I talked about it in yesterday's price prediction video. Around 350 would be your lowest level. I honestly didn't expect the stock to fall all the way to 318 in the beginning of trading today. Well, now the stock's back at about 350, and that makes a lot of sense to me. Now short score sitting at 93. $748.11 million worth of short positions currently in AMC stock. 27.5% short interest of free float. Free float out on loan, 38.58%. Shares out on loan, 199.18 million. Days to cover, 8.19. Trailing 3-month cost to borrow fees, 253.58%. And about 82% share utilization. So that's kind of what's going on with AMC stock today. If we pull up the charts again, very big drop, and I think this is really priced in all of the bad news. I don't really think there's any bad news that could come out that would be a big shocker. I think the markets, just with this drop, are expecting quite a bit of dilution as is. So if you don't ultimately get that dilution, like I said, that could be a positive as well. Now, what we typically see after these big drops is the stock kind of bounces back. Now, with this reverse split and the implications for that, maybe not as big as we've seen in the past, but you at least probably find some support here until we get a little bit more clarity from Adam Aron, from some of the executives, or what's going to be happening. Now, the official date that this will actually take place is August 24th. So we did get an actual date on this. So that's when we can expect the reverse split. Again, dilution is not guaranteed. Nothing's guaranteed. We could see 5% dilution, we could see 0% dilution, or we could see 50% dilution the day after the reverse split. Anything is possible, so make sure you keep that in mind. Odds are you're not going to see a lot of dilution right away because, I mean, look at this stock. You don't want to sell capital, raise capital, sell stock when the share price has just dropped 35% in a single day. So that's going to do it for this video. Let me know what you think about all of this information down below in the comment section. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.